Hello, welcome to Chapter 19 for Business Math called Financial Management. So this is Lesson 19.1, Corporate Income Taxes. As always, like I tell you in the beginning of every one of these videos, make sure you're reading through the chapter, looking through the examples, paying attention to not just how do I get through this problem, but what am I doing? Why am I doing it? The more you understand about the what and the why, the more these problems will make sense, especially as we move through the chapter and look at more complicated problems, especially like when we get to those algebra type problems. So pay attention to the what and the why, not just how do I get through it. Okay. All right. So let's read this little summary here. Taxable income is the portion of your company's gross income that remains after normal business expenses are deducted. The structure of federal corporate income taxes is graduated, meaning there's levels. That's what graduated means. Okay. So if we look at this table here, so first they give us this little income, taxable income equals annual gross income minus my deductions, or the company's deductions in this case. So deductions is the amount that's not being taxed. So now, once we look down here at this table, it's a graduated table, meaning that there's certain levels. So $0 to $50,000, you have a 15% tax of the amount over $0. So anything more than $0 has a 15% tax. So 0 to 50,000. It can't be over 50,000. So that means that it needs to stop before it gets to 50,000. And then 50,000, so it's over 50,000. So 50,000 or up to 75,000. You have a tax of 7,500 plus 25% over 50,000. So it's a little confusing, I think, on this one sometimes with students. You have to look at how much, because the 50,000 is the 7,500. And then anything above that, even $1 more, is taxed at 25% up to, 75,000. So you could have $25,000 here, and you need to multiply that by 25% because that's the difference between 50 and 75. So it just depends on what we're given. It's not always going to be 25,000. I don't want that to be confusing yet. So we just have to look and see the amount we're given, the taxable income, where does it fit in this chart? Which level does it fit in? And then I'll show you the calculation here. So let's go ahead and look at the table here. So again, this table, they do this a lot where they give us some basic information. We get the corporation's name. Not terribly important. We don't really need to know the corporation's name for this one. Just a little bit of context there. Then they give us the annual gross and the deductions. And we want to calculate the taxable income. Well, look at that. They told us how to do that up here. So we have annual gross income minus deductions, annual gross income, deductions. Look at that. They put it in order for me. So I'm just going to subtract, and I'm going to get $118,335. So this is my taxable income. This is where I land in this graduated table. So I need to figure out where do I fit. So it's more than 100,000, but it's not more than 335,000. So I'm in this column here. This is where I want to land here. I'm in this little column here, and I'll erase this so it's not kind of ugly looking and in my way. But this is the column that I'm in. I wouldn't suggest you going through and circling these because it's going to get real messy really fast. It can be hard to read. So my total tax is going to be $22,250 plus 39% of everything over $100,000. So I need to take this 118,000 and I need to subtract 100,000 from it. So I know, what am I multiplying 39% by? So I get, let's see, I get $18,335. So that wasn't too hard of a calculation there. You can just take the 100,000 off. And this is what I'm going to multiply by 39%. So when I multiply by 39%, I get another $7,150. An ugly 5 there. I don't know why that ended up so ugly. Oh, and 65 cents. Forgot my change there. Don't round off anything unless it tells you to. I have a lot of students who are doing this where I'm going through and correcting it, and they're rounding percentages off. They're taking pennies off and things like that. In accounting, it's very important we do not round Unless the problem asks you to round, I wouldn't be doing any extra rounding. Don't take off a tenth of a percent, because if we're talking about millions of dollars, that will make a big difference rounding that off. So don't be careful with your rounding, okay? Just my little warning there. All right, so we have this $7,150.65. We need to add that to our $22,250, because remember, that's no matter what. That's what I have to pay on the $100,000. I have to pay this extra $7,150.65 on the amount over $100,000, because that's the 39% there. So I have to add those two together. So when I add those two together, my taxes are $29,400.65. So that's how much taxes this company will owe. All right, so each one of these, you're going to do the same thing. You're going to figure out, where does it fit in my graduated table? But first, make sure you're doing this basic calculation here. Subtract your deductions. That's an important step there. And then figure out, where does my taxable income fit in here? Do your basic subtraction on the amount over, and then multiply that by the percentage they're giving you right here. So this table it's a little bit funky. It's not set up the best way, but hopefully that explanation helped you a little bit. So again, just looking at number one, I subtracted, and I have my taxable income. I identified my column here. So this is the one I'm looking at. So I know it's going to be $22,250 plus 39% over, so of the amount over $100,000. So of the amount over, that's talking about, it's this percentage of the amount over this. So that's why I subtracted the $100,000, because I already know that's $22,250. That's how much it's going to cost me in taxes. So I have $18,335 over my $100,000, which is 39%. When I multiply, I get another $7,150.65, and I need to add those two amounts together to get my total tax. All right. So I hope that helped. I know I went through the same problem twice. I was just walking through it again because I know it's a little complicated using this tax table. So for number 5, they're giving us something slightly different here. It says Papa's Manufacturing Company had these business expenses for the year. So it's giving us all of these expenses. We have wages, rent, utilities, interest, property taxes, depreciation, other deductions. And it says, what is the total of Papa's business expenses? So we just want to add all of our columns together, right? That's pretty straightforward. We just want to, what are they all total? What is the taxable income? So they also told us down here, Papa's has a gross income of $1,826,000 for the year. So taxable income is your annual gross income. Here's his annual gross income minus his deductions for the year. So they're calling them expenses. That's one thing that sometimes they do. They switch the wording. So these are the deductions that we get to take away. We get to subtract all of this from the $1,826,000, and that'll give us our taxable income. What is the federal corporate income tax for the year? So same thing you did on this table. You're going to go up here and go, where does it fit within the table? And then do the same thing. So you're going to have a certain amount plus a percentage of anything over. So just make sure, pay attention to where it fits in this table. All right, so that's section 1. I hope that helped, and I will see you in section 2.